All right. Hey, guys. Hey, Ian.
How's it going?
Good, good. So I'm the owner of Momentum Realty here in Jacksonville, Florida, and Brittany is our owner broker as well. And we have Ian Tudor. Ian, we'd love to hear your story from the start, where you are right now, and then what you're doing right now. And then I want to backtrack all the way back to when you were at Virginia Tech and get your story from there. So tell us where you are today in your business.
You want to start now, and then we'll go backwards?
Yes.
Okay, great. So currently I live in Charlotte, North Carolina. I am an investor in mobile home parks, which is an interesting asset class that a lot of people don't know about, or it's becoming much more popular. I've been doing this for about 3 years now. We own 300 units with another 300 under contract. So I've been doing this full time. In Charlotte, we own our assets in North and South Carolina. How we kind of got started in this business is I used to work for a Class A office REIT out of Orlando, Florida. And through that, that's kind of where I learned real estate. So I learned it from the institutional capital side. I was in an investments team that, gave me exposure to, really good sized deals. I remember when I first came in, I was working super late hours, working on a $500 million deal. And, gave me a lot of exposure to just how the, I guess, Wall Street world views capital and how they analyze deals. So that was an amazing experience that I worked for 2.5 years in Orlando. Before that, I was at Genworth Financial. In Genworth Financial, that was it was a financial development program. At the time, I kind of just took the first job out of college. I didn't really know what I wanted to do. And for me, this seemed like a good opportunity for me to experience a lot of different things within corporate finance because I didn't know where to go. And through these different stages, it came to my attention that maybe corporate finance wasn't what I was looking for. And through that, I found a mentor who really piqued my interest on alternative investments as well as real estate. So I bought my first house when I was 23 years old. I guess what they call house hacking now. I had several roommates. They paid for my rent, and I lived rent-free for 10 months in Richmond. That was in 2013. And to answer your question, yeah, we both went to Virginia Tech. I was a part of a organization called SEED, which was an endowment where we got a small portion of the endowment to invest and learn how to value invest. And that was a great experience. I wouldn't say I'm very good at the stock picking realm. That wasn't my forte, but really a lot of high caliber people, obviously, in that group. And, there's some great connections to be made. And I say that probably was my start of my investing, piqued my interest. And that's kind of where I'm at. And we can kind of go a million different directions from there. How do you like?
Yeah, I would love to go back to your Virginia Tech days. I mean, so you graduated 1 year ahead of us in 2012. And what caused you to become interested in the Seed platform? And so the really cool thing, just as a background for the audience here, there's an endowment at Virginia Tech that allows students to manage their funds on behalf of the endowment. When I was there, there's a bonds and investing by students, which is the basis group. And we managed $5 million in bonds and made trades. And then Ian was on the equity side, so trading stocks for $5 million as well. What caused you, because those are very select groups, they're hard to get into. I actually applied to Seed and didn't get in. And I had to apply then again the next year to get into basis, which funny enough was a better fit for me anyway. In terms of my interest. But tell me, what made you choose to get into Seed, or how did you get into that?
Yeah, I got to give a lot of credit to my parents. So my parents started, I remember sitting down at 13 or 14, and I sat down with their financial advisor at the time, and we kind of talked about mutual funds, and they gave me a little exposure, a couple $100 that I put into a mutual fund at the time. And I didn't really touch it. I was pretty frugal as a kid. I always, pushed my parents to buy something, and then I decided if I really wanted it or not, after that. And I always had these small businesses like lemonade stands and, yard work and X, Y, and Z. So when I went to Virginia Tech, that was kind of one of the things early on that I've noted that it was something that I wanted to at least pursue. I was in finance all along. I didn't stumble into finance. I had a feeling that finance was, my dad thought that might been something that I would like, and I've always been interested with money. So that was kind of a natural fit for me. And once we found the opportunity in junior year, because I think it was the end of my sophomore year when they did, I think the interviews were in spring. And then I interviewed, actually didn't get in the first time as well. So I got denied, but then they brought me back. So I guess they had a disagreement within the group, and they called me back like within 24 hours, and I got in. So it was a roller coaster of emotions, and I realized, it's an extremely difficult group. And in hindsight, some of the best relationships from Virginia Tech, I don't keep in contact with many people, come from that group of people, which is, as you said, highly, highly selective, and they're all doing amazing things.
What is it about the culture of the group that you think is so valuable?
The culture of Seed?
Yeah.
Yeah, I think it's partly just the interview process that they had. They did a pretty good job. I remember part of our interview, they had like 25 different pictures of anything of around the world, and they like go through and they like seeing if you're up to date with current events. They would have like prime ministers of Iran or like some like crazy stuff. And they did a good job of like weeding out people who I think were not that interested in this program. And so that was a help. And then on top of that, just the structure of the meetings and getting to know people and the kind of the real leeway they give you at Virginia Tech. I don't know if basis is the same, but it seems like they give you a lot of resources to really make decisions. It's not like you're on a leash. They actually like really let you make some serious decisions with money, and that responsibility, I think, is really empowering to a lot of people, and it gravitates the right people to those types of programs.
Yeah. So it sounds like they had to do some due diligence on the people coming up, and that just brings in the quality of the individual. It wasn't like a walk-on team where anybody could join. Like, you had to do your homework in order to get it to go.
Right. And then even when you made presentations, I mean, the whole group would grill you, right? Like, you didn't go in with this idea of, I'm going to pitch a stock that I did for 5 minutes, because they'll start asking you some extremely detailed questions about P&Ls and, the yearly financials. And so if you didn't have your answers, you'd embarrass yourself in front of people. And I remember one particular stock presentation, they made me bring it back because I did not have everything up to their standard. And so that was in and of itself, they had a high standard of the people within there. And then they did like New York trips. I think you might have been a part of something like that as well. That allowed exposure to kind of people on Wall Street. It was really kind of the funnel to Wall Street for Virginia Tech for a basis or seed.
Right. So that's really where you got your.
That was kind of the path. That's where I go.
Yeah. And then you went straight in Genworth Financial.
Yeah. So I wanted to go to Wall Street. That was kind of my initial plan. I think, it was like Wall Street consulting were kind of like the two things a lot of like people wanted to do. Deloitte Consulting and a couple other Booz Allen, I think, was another one that was bigger in DC area. So I kind of bought into the whole Wall Street game, and I had a super day, and I didn't get it. And I think in hindsight, it's probably one of the best things that's happened to me, just because it brought, I don't know if I would have found real estate, and for me, I went to Genworth partly because it was 2012. I didn't really know what I wanted to do. It seemed like I applied to a lot of other places, and Richmond, Virginia seemed like somewhere place that I would be interested to explore. So I don't think I had a huge amount of foresight in terms of my job. I think if I did it now, I'd have a very different plan of action. I probably wasn't I applied to a ton of places. It's just my my internships weren't as strong as some of the other people that allowed them to, land some of those bigger jobs.
Right. So fast forward to today, how does one person get into trailer park investing? I mean, you said you were there with the REIT, so you got exposure after that, but how do you end up going from corporate Wall Street job to going out on your own and accumulating these assets?
Yeah, I mean, I'll just say, where I was at the REIT, we were doing Class A office buildings. So it was like a totally different asset class. Not that it didn't help me, because it was a huge help. And, I have an investor who came from that position. So there's a lot of amazing aspects of that. But in terms of the business and how you source deals and how you put debt together and stuff like that, it's different in terms of how those work. So to answer your question, that was kind of a side hustle that I was doing the whole time while I was at Parkway. I saw these guys making huge amounts of money. Like, I remember the CEO one year made like 11 million bucks, and I was like, I kind of want this money. Why am I only getting paid $60,000 a year? And so I kind of just saw it and said, there's got to be a path for me to find this. And I knew investment was a path. And so I actually looked at other forms of real estate as well. Like mobile home parks isn't something that I just knew about. I just stumbled into it. And what I did was I was seeking in Orlando other single family homes in like 2013 or 2014 when I moved down there. And I couldn't find, I guess, investments that really meet my criteria. In hindsight, now knowing where the market is, I probably wasn't looking hard enough. There should have been plenty of opportunity in 2014 for Orlando. But then I looked into flipping and a couple other things. But my roommate at the time, who worked with me at Parkway, actually gave me the idea of mobile home parks, and then I bought an informational packet from one of the larger owners in the country.
Huh.
That kind of started my path, and I tried to do a partnership with him and then the guy who I bought the single family home with in Richmond. And partway through, a couple months into us trying to launch something off the ground, we found that we had different risk tolerances, we had different interests, and so that kind of shattered. And, I kind of continued on my path of trying to find other ways to monetize or just have investments on the side. And then I came into my current business partner, who is Ryan, and we knew each other in childhood. I was friends with his younger brother growing up just because he's 3 years older than I am. And we reconnected. He was in MBA school at Wake Forest, and he came down. He was in Miami, and we connected, and we hung out like, I don't know, if it's 12 weeks he was in Miami, we hung out like 8 of them or something. It was nonstop. His girlfriend thought we were dating, which was kind of funny. But we just connected really hard, and he pitched the idea, and I said, "What about mobile home parks?" And he's like, "You know what? I love the show Trailer Park Boys. I'm in." And so he was all in, and from that point on, we kind of navigated, and we built a database of 1,300 parks within the areas that we wanted to be in. And then we started calling brokers and sending mailers and making cold calls. And that's how we really started. And a lot of people, when they start out, that's the best way to start, just because things are priced so aggressively. It makes it a little difficult. And, the hard part is capital, obviously, when you don't have a track record. And I can kind of talk through certain steps we took to build those capital connections, but we had to make some sacrifices to allow that to happen. Now we're in a spot where we have more capital, but the deals we like don't necessarily measure all the capital needs. So there's growing pains with all aspects of business. But to answer your question, the best way to do it is direct to owner. And you don't need any of my background to do that. There's literally people in the Philippines like selling lists of mobile home parks in Facebook groups now for a couple $100 for the entire state. So I put hundreds of hours into my database, but there's people doing it now for relatively cheap amount.
Right.
So can you walk through an example of your day? Because it sounds like you guys are structured. I also am curious, when you say we, so is it you and Ryan only? Who's your team? And then what activities are you guys doing every day? Do you guys have delegations of activities and responsibilities? And kind of walk us through your day to day.
Yeah, so it's evolved a little bit just because we hired a new employee. But so we have two full-time employees. One of them manages kind of like our Gastonia portfolio, which is 4 parks. So one's in Salisbury, which is a town 45 minutes north of Charlotte, or 35 minutes, and then Gastonia is kind of to the west. So what we did, our strategy, just to real quick, kind of our strategy has been a little bit different than others, where a lot of people are going after massive assets and kind of buying those all over the country. We're more selective on where we are, and we're buying smaller assets, clustering them together, and then putting a manager to manage all three of those. So our day, most recently, it kind of changes. Like today, our well went out at one of our properties. So my business partner's been trying to hustle to get our residents water because, they have no working water. We had a sinkhole at another property yesterday from a bunch of, so I've been working on that all morning. So, as emergencies come up, like we got to resolve those. But for the most part, we have 5 deals under contract right now. So I'm doing due diligence. I just got, I'm trying to ink, multiple contracts and start doing the due diligence for that. I would say the nice thing about this job is, outside of like accounting and stuff like that, there is a lot of variability in terms of how we spend our day. Before all the chaos kind of started, I say most of our day started off like lead generation. So for the most part, Ryan or myself would be cold calling for an hour or two in the morning, and then we would kind of go to the more administrative things. And then when he wasn't cold calling, I'd be cold calling, so we could get, at least both of us together, at least an hour each in of kind of lead generation, because that's where the growth is in the business. And so that has kind of led to now our acquisitions now. So now we're focusing on acquisitions. And then once we get to acquisitions, then we got to stabilize them. So then it's operations, but then we can't forget about lead gen, because then you don't have your next wave of acquisitions. So wear a lot of hats, but I don't know if I really answered your question. That was kind of a long-winded answer.
Did. I mean, the goal is to get into lead generation is your one thing, because you don't have a business if you don't have the lead generation. So I wanted to see how your day was structured and how much time is focused on that, just because we're in a similar business where that's the main priority.
Right. That's where your real growth happens. And I mean, before, I'd say, 2 months ago, or not even like a month ago, we were having to self-manage a lot of stuff. And so now we're at a point where we just said, it's worth us to bite the bullet. We have some cash in the bank, bite the bullet. Let's start hiring out some of these admin stuff, because it was really bogging down our days. That took away from our ability to grow. And so it's like working on your business and in your business, right? That kind of concept. So we made that shift, and we still get pulled in it, but our goal is to obviously try to make those $100 decisions instead of those dollar decisions.
Yeah, it's awesome. It's essentially the same exact structure that you have for a real estate agent. You wake up high energy in the morning, lead generate for 2 to 3 hours and go get the business. And if you don't, your business is just going to look like a sine wave up and down, and you're going to have lulls, and it's going to feel really weird. So if you don't keep your foot on the pedal, if you hire someone, then when it lulls, you're going to have to get rid of them. And then you just go through the cycle over and over again, which we see with people. And I think like the cool part is you figured out, you need to leverage up those admin tasks that are the low dollar per hour activities right away. Now, did you learn that from failure, or did you learn that from observation, or?
Both. I mean, so the way I started in mobile home parks is probably somewhat useful. So I quit my job in 2006, end of 2016, and moved in with my friend's parents. So Ryan, I actually lived in Ryan's childhood bedroom starting off in Charlotte, and he was still working a full-time job. He had a wife at the time, and they had a house, and they just had more obligations, student loans and stuff like that wouldn't allow him to do that. Just they couldn't afford it. So I took a chance on the business, moved into Ryan's family's home, and lived there for 10 months. And then we landed a pretty large opportunity. And then I moved into a mobile home park. And so I lived in Ryan and I switched off mobile home. That allowed Ryan to quit his job. We both got paid $35,000 a year, and we still pay ourselves that. And what we do is every other week for 14 months, Ryan would be there for a week. I would be there for a week. And that gave us like how to operate a mobile home park. It was an apprenticeship, right? So I dealt with all aspects of mobile home parks, bringing in new homes, evicting tenants. I dealt with meth addicts. We got this whole wide experience. So now we can actually see what that is. But like partway through that, I was like, man, I feel like I got the gist of this, like I feel like we're now, because that took us out of the game for the lead gen, right? And so like we learned from our experience on that point where we only did like 2 deals in 2017 when we should have probably done a lot more than that. Now in hindsight, where deals are at, but we were so wrapped up in that it took us away. But at the same time, it was amazing, valuable, useful use of our time as well, because now we know how to operate parks where a lot of people don't. So, there's balances, but I'd say, we've probably played certain operational things out too long, and it kind of hurt our growth. And so I'd say in general, it's mostly experience, but, we read and try to stay on top of that stuff too. So it's kind of a combination of both.
Who's your competition? Are there big players? I'm sure there are big players in your area. Do you have a lot of big players right now? Is it saturated? Kind of tell me your competition landscape going on with the mobile home parks.
Yeah, so I'd say mobile home parks is, not as aggressive as, apartments. But, all the big private equity shops are definitely chasing mobile home parks. I mean, I sat down with Apollo in New York this past summer, and they just raised $250 million just for mobile home parks. And that's just equity, right? So if you that's probably $800 million worth of mobile home parks. There's several funds that are raising hundreds of millions of dollars. So are they going after our assets? No, not really. I mean, I'd say that's just kind of like a reflection of what's happening within the market. I'd say for our direct competition on the smaller assets, it's more, more high net worth individuals or people with funds that are looking to acquire and group together large amounts of assets to have that's kind of the larger, the different tiers is obviously the private equity. They're highly capitalized. They go off the best and shiniest deals. Then you have like kind of the mid-tier, like regional or kind of mid-sized shops. And then you have the local guys who will go after deals too, where they have a couple in the market and they know the owners, and they have that as well. But I'd say those are kind of like the three separate groups of buyers.
Cool. So now that you're here, so you lived in a friend's family home. You moved into a mobile home park. You didn't do your first deal for 10 months. I mean, how were you feeling at that point in time? Did you ever feel like you wanted to quit?
Yeah, so because I mean, I didn't, in hindsight, talking about structuring time, when I should have been banging the phones 9 hours a day in the early days, and I didn't, because we had one or two parks, and we owned one park in early 2017. So we had one deal that kind of gave me the confidence. I was like, okay, I'm gonna give this a shot. I made $4,500 the first 6 months of 2017. And then I had to put all that money back in because we had a massive water leak. So I made no money. Luckily I had some savings, but I mean, there's definitely times where, before we really got self-sufficient in the past, it was really probably in the past, year where we feel like, okay, we can continue this for some time. We kind of questioned, how long we could do it. We know we could stay frugal for a long time. Ryan is frugal. I'm relatively frugal. I still have roommates, even though, I could afford a place on my own. But I think in the mix of it, you have all those emotions, right? And those are all natural emotions to sometimes doubt yourself in the process. And what I found interesting in business is you have this concept of like the days are so long, but the years go by so quick. And it's a bizarre feeling of feeling like you're not doing enough. But then when you look back, you're like, okay, I mean, it's not like we're not doing anything. It's that balancing effect. I think the thing that really gets to people, and it's got to us in the past, is we compare ourselves to others. And when you start doing that, you start looking to other people's success without really keeping in line like what your true goal is. Not everyone needs $100 million portfolio. If you do, like, amazing, go for it, but make sure you're doing it for the right reasons. And we got caught up with guys starting similar times with us, and they have way bigger portfolios than we do. And we're really friendly with them, great guys. But we've started to learn that what we're trying to build, I think, is more strategic and is a better option for us longer term. And it makes more sense for what we're trying to do. So to answer, yes, there was times where I don't think there was a time where I haven't told anyone this, but I have looked online like real estate jobs of like, what's my plan B? Like, what's my plan B if all goes to hell? And like, who would I want to work for? And I always come back to, there's a reason I did this. I like the freedom. I like being able to write my own schedule. And freedom's kind of weird as a business owner, because you're like, oh yeah, I'm free, but you have way more options, way more obligations. You have like way more things to worry about. You have way more, risks to handle. But if it's more freeing, and it's a really bizarre idea, because it's yours, I guess.
Yeah, I think a lot of entrepreneurs go through that feeling of, okay, if this doesn't work, what's my backup plan? I need to make sure that we have that plan B. And then, because you go through those breakdowns before you get through those breakthroughs, and then you question everything you're doing. I know we've been there as well.
Yeah, I don't think people should shy away from that, like embrace that. And like, you should really question yourself, like what you really want. I think a lot of the world tells you what you think you should want, and entrepreneurship's sexy right now. It's not for everyone. I mean, I've seen certain people go into this business and really fail, like not do good, like lose $50,000, which is when you're first starting out, that's a lot of money. I mean, it's still a lot of money. But losing that early on, if that's, a 30-year stack or even more, that could be pretty crucial for your early start. So I think, don't shy away from those, but also, keep in mind like what you really want. And, in 5 years, you can massively change your life, like wildly change. Even in a year, you can wildly change your life. And if you keep that in mind, and I think it's a nice motivator, because now I don't have to really answer to anyone, which is great.
Yeah. Ian, what's the difference in your mind between someone who's successful and someone who fails in this industry? Because you've seen it.
Yeah, I'd say one thing Ryan and I are really good at is, we're lucky in some regards, right? So like, I don't want to just assume that, I have all these answers, but I'd say in general, one, we're really good networkers. And Ryan said something to me the other day, which hit home. And I was like, we're kind of lucky that we are business partners, because we're really good complements, and we grew up around each other. And it's like, how do you find a good business partner? He's like, talk to 1,000 people, you'll find who you want. You'll find someone who's probably willing to speak with. And so last year we started like writing down people who we connected with within mobile home parks, and we're already at like 800 people that we've written down, that we've talked to in some regards, either investors or lenders or vendors. And so that is like a Google Doc that we keep in contact. So when people are like, oh, do you know anyone who buys mobile home parks in North Dakota? It's like, yeah, here's 6 people like that I know of that want to do this. And so like, it allows us, I'd say networking has kind of really changed the game for us, and that's how we got started. So the first couple of deals that we did, just to give some perspective, like, and I'll be fully transparent, we got a $1.525 million, so $1,525,000 deal, and that was in Durham, North Carolina.
Great.
So amazing market. I was doing this on the side, so that we located this deal before I quit my job, so I couldn't go to my boss about it, because I don't want them to know like what I was doing, even though in hindsight he would have been totally cool with it and probably would have funded it for me. But I just didn't know where to go. This was new territory for me. So we partnered with someone who we reached out to in the past, who was a larger operator. And we made $75,000 as a finder's fee, which is 5%, which is not bad. And what we did was, we kept a third of that in the deal and cashed out the other 50. And that allowed us to then put money in other deals. But that deal's about to sell for like $4 million. and they didn't do much to the deal. And
Yep.
like we left, probably to our personal net worth, if we raised that money and did it, we, probably $500,000, right? Between Ryan and I, but even more than that, depending on our press structure and that. So, but the thing is, we got started, right? Like we got started, which is more important than anything. And that allowed us to be successful. So I'd say networking is huge. Second is, being too greedy early on. A lot of people like want to own the whole deal right up front. And, our deal where we slept on the blow up mattresses, that was a $10.5 million deal. He's amazing. The guy gave us the opportunity, let us manage the property, paid a little bit more for us to be managers, but he got a steal because we increased the value of the property by $5 million in 14 months. We didn't walk home with much of that, but it doesn't matter because now we're started. And so I've gone through these emotions of feeling like I've gotten ripped off before. And I've realized that actually was part of the reason we were successful, is because you got to put in your time before you have your $5 million payout, right? And so we've learned to give more up front and then you receive later on. So like this mentality of boosting everyone else up, even if it's, highly wealthy people. Now we have a large group of people who we can call on and get things done that we couldn't have otherwise done. And the person I was talking to who lost $50,000, they have no one to call on. They called on me and I try to like help them out, but they didn't have a large enough network to get something done. And also the other thing that we really do, that we love to do, that a lot of people don't, is we're operators. Like we operate our property. We don't like, I don't sit from my room and just type on an Excel spreadsheet and try to make decisions. Like I meet my residents, I tell them I'm the owner. So many people are like, I'm with the management company. So like, I get it. Like I get why you do that, because you don't want to have like certain relationships with your residents. But I'm like, no, I am the owner, and this is what I'm saying. You do it or you follow my rules or you get out. Like I'm going to respect you as a person. But at the same time, we're very active on our properties. And I think that's another useful quality that we have that allows us to be a little bit different than other people.
That's awesome, dude. Your story is so cool. So that one in Durham, has it already sold?
No, they're in negotiation right now, but it's been, we talked to, I guess, the person listing it, but yeah, he said it's around $4 million or something like that. So, I mean, it's like a massive win for them. And, I'm glad we were a part of it to some extent, and I think that just shows me that one of my mentors, who's also my largest investor, he told me, he's like, if you're doing if this is your third of your 600 deal in your lifetime, it's okay. Like it's
right.
You got so many more to work through. And so it's like, okay, you gave up some money on the upside here. You got a lot more that you can do. It's like, if this is the last year of your life, yeah, I mean, fight for every penny. But we're starting to learn that deal volume is important. And it's important to get those experiences so then you can start to build, more of a reputation for yourself, and you can negotiate terms better. But it doesn't come overnight. Like you got to put in that experience. And I'm sure similar with you when you first started in brokerage, like I can't imagine probably what you had to do for your first couple of clients compared to what you like ended off on or you're still doing, right? And I'm sure it's wildly different, but now you have that name brand that people in Jacksonville are like, I'm going to call John up. I'm going to get this done because I know he can do it. But that was because you put in all that work to begin with. And a reputation doesn't happen overnight.
Yeah, you're right about that. My first client that I had, there were two of them on the buy side. I showed about 50 homes and most of them were foreclosures, but I learned everything about a house because they would fall through on the inspection and I'd attend the inspection and I'd be bugging that inspector. What's this? What's that? How's that work? What is this INSCO panel? Why is that going to blow up the house? Like, why is insurance not going to do it? What's a polybutylene piping? Like, I learned the ground game by doing the crap. And at the end of the day, I earned like $500. I'm pretty sure I lost money just in gas money. driving around
Yeah.
with this client. And then the second one was an investment property where I had to help the seller evict tenant, and then it had a smoke smell in it, and then I had to learn how to get a smoke smell out of the house. So it was like none of it was easy, and I didn't make money, but the value of what I learned I still use today, which is so
Right.
valuable. But yeah, so we kind of talked Ian about your past, where you came from, where you are today. Like, what is your goal now? What is the future of what you call, it's called the Archimedes Group, right?
Yep. So we love the business. I mean, I think depends what you want, but for what we want to, so we're like 300 units. And so I think our next stage is to get to 1,000 units in about 24 to 36 months. And
Okay.
I think at that point, once you're at 1,000 units, you're much more attractive from it gives you optionality, right? Like right now we're a little too small for a lot of people to really care. And that's fine. And we've learned through experience, just like lending and investors and just opportunity stake, scale has importance in real estate, and it's important to build yourself. You want to be the most attractive, opportunity for someone if they want to even buy you out. And maybe we don't want to sell out, but we want to get to the point where we have the best valuation for what we are currently building with the opportunities that we're seeing, that would give us those options. So at 1,000 lots, that puts us about a $40 to $50 million business, which is a pretty good size. Where at that point we could recapitalize, and what I mean by that is we could stay part owners, but we bring in a new wave of investors who have lower costs of capital, which just means they want lower returns because the properties would then be stable at that point. And then we could continue to hold on to some of that fee stream income, and use some of that capital that we just brought back to ourselves in other projects, or we can keep on building mobile home parks. But for us, we're kind of in this weird adolescent phase, and we want to kind of get to adulthood, just in terms of mobile home parks and in terms of capital. And so this is much more of like a portfolio construction play for us, and then this gives us freedom to invest in maybe we want to invest in technology companies. I don't think I will, but like it gives us that opportunity to have a sizable amount of wealth for Ryan and myself, and it would make it more attractive for someone who might want to invest in our properties.
Awesome. That's super cool. So you just want to have the option to exit if you want to.
Yeah, and I wouldn't be surprised if we held on to it, but we may change out our investors. And I mean, some of the investors want to invest with us, but one of the difficulties we have is we have to go on recourse debt. So that scares a lot of people. And what that means for people who might not understand is, assuming, say it all goes down south, like we buy a property and a tornado comes through and it totally destroys the property, and we have to bring in new homes and X, Y, and Z, and it's just too expensive for it to work, then they can come after all my other assets. And that's scary for a lot of people, especially if you're a limited partner. And that's just because, you're putting a lot of faith in me as an operator, which I can understand, to make decisions that could affect your family's life. And that's also part of the reason we're trying to scale, because we're trying to get ourselves out of that debt situation, which is common within the mobile home park space. So I have several $1 million of recourse debt over my head, as well as my business partners. But we're pretty competent and confident that we can deliver a business plan. So big risk, big reward.
Right. Yeah, it sounds like you might have more risk from like things that can happen at your park rather than like a recession, right? Because the idea is that trailer parks are somewhat recession proof. Is that true, or is that just what people say?
Yeah, it's. I would love to think it's true. I never lived through a recession with trailer parks. Like, from my personal experience, I can't speak to it. But I will say a lot of the larger, publicly traded companies. So Sam Zell was really the forefather of mobile home parks, and manufactured housing is how they speak, as they call it.
Got it.
And so he owns the largest company in the nation. So they own 145,000 sites. We own 300. So it shows you the scale in terms of how big these guys are. Yeah, they've had like, I forgot, it's been like 40 quarters of NOI growth. So like they did very well through the recession, and they have really nice properties that are totally different like quality type than what we have. But I mean, there's a lot of data to show that you actually expand your buyer pool as people lose houses and lose other investments, and they have to find somewhere to live. People don't want to be homeless, understandably, and a mobile home park is a great option for a lot of people. So I don't say it's recession proof. I'd say probably more recession resistant.
Resistant, yeah. So one more thing before we jump off this, you are really involved in social media and sharing your story on social media. What's important to you about that?
Yeah, at first it was Ryan and I's real goal is we saw a lot of just nonsense and kind of BS in terms of how people portrayed the industry. And we felt like we could be a new voice, partly because people try to portray this industry as one that was, very hands off. Like you just buy a park and it just starts printing money, right? Like you sit back and your checks just overwhelm you at your house. Like you can't open the front door because there's so much money. And we just despise that idea because it's a lot of hard work. Like there's a lot of things that are constantly going wrong. And even though it's less maintenance than an apartment complex and we don't have as many, repair calls with our maintenance man, there's still a lot of things that we have to handle and be active. And we want to just give people the real perception of what the industry is like, as well as having a brand. So in the future, say we want to raise large amounts of money for mobile home parks. I think when people are part of your journey, they're bought in, they trust you, they give you the ability, you're kind of doing a long-term sales pitch, right? And I think what you've seen with what Grant Cardone has done in the apartment space, he's raised about $250 million in 18 months. I think this direct to consumer from a capital raising perspective is really efficient. I mean, maybe not efficient on like doing, 23,000 K1s, but like efficient from able to raise money really quickly, really fast. And Brandon Turner from Bigger Pockets has done that. He's now raising money for mobile home parks in his Open Door. And so I met with him and kind of interested in that. There's several other guys, another guy named Dan Hanford, he's out of Columbia, South Carolina. He raised like $14 million in like 2 weeks. And a lot of it has to do with him going to conferences, and he has a Facebook group where he has like a couple thousand people in there. And he has this massive brand around him that really gives him the autonomy to dictate your terms. I mean, when you have a couple, 10, 20, 30 people, you can dictate your terms a lot better than if you just have one big investor who's like, this is what I'm doing. It's like, well, it's kind of hard to argue with you because you're bringing, $8 million to the table. So that is really fascinating to me. I'm not sure if we'll ever execute on that, but I think I think having options on the table from a capital raising perspective, especially from retail investors, is a really fascinating proposition that we may do. And also from kind of setting the reckoning straight, like, if you look at if you type in mobile home parks and type news, it's like murder at mobile home park, twister at mobile home park, drug deal gone bad at mobile home park. Yeah, it's like, if there's a tornado anywhere within 5 miles of mobile home park, they'll put the mobile home park as the front picture, even though like a single family home development just gets like absolutely. So it has like this really negative stigma from a public's perception. And there's a lot of amazing people in our communities. They might not have a lot of money, and but some of them are living really decent livings, and they have stories to tell as well. And so we want to just show that like these places aren't scary. I mean, some of them are. Like, I don't suggest you just to drive through all mobile home parks at night, like at 11 p.m. Don't go on a tour of them, but like, be aware that, just because you're poor doesn't mean it's evil, And so I think that's part of our thing too. Is like, I speak to a lot of my residents. I never feel unsafe. And we have been put in like threatening situations, and we've had some scary situations, but it just goes to show that, there's a lot of positive with this, and counties hate mobile home parks. So the very few mobile home parks are built around the country. And I think, I'm not arrogant enough to think that my LinkedIn videos are going to change the county's perspective, but I think if enough people put out positive energy about this, that, that conversation could change for certain people.
Yeah, that's cool. Well, we love following your story. So keep it up. We love watching what you do. Is there anything that you want to share with us?
Making those mistakes. Is it going through?
There you go. You're on.
Okay. My internet's a little spotty over here. So one of my last questions is, we had discussed previously the importance of networking and being open to learning. For people coming into this space, what are some books, some podcasts, what are some important resources that you would recommend to people and new entrepreneurs looking to get into the mobile home space or just the real estate space?
Yeah, so we started to find that Facebook groups, I mean, we have a Facebook group. It's not like a paid one or anything. It's like just 500 people that we have that you can ask any questions about mobile home parks. Ryan and I talk to a lot of newcomers coming into the space, so feel free to reach out to me. I can probably put you in contact with other people that might be interesting for you to network with. The industry is really friendly. I mean, I've talked to people I sat down with a couple guys who have like 7,000 pads earlier last year. Ryan is really good friends with and he's been really open and helpful, and people are more willing to give than you probably think. And I think the step one, that's also why I'm on LinkedIn. I connect with other people about mobile home parks through that. So like, reach out on LinkedIn, I think, is another one. Facebook groups is another one. There's some live boot camps. I can't speak to them because I haven't been to them, but there's one called Frank and Dave, which they like the 5th largest mobile home park owner in the country. So they have like 25,000 pads. They're pretty big. I actually bought their material back in 2014, but they put on every couple months, they put on a boot camp somewhere in the country, and they like break down everything you need to know about mobile home parks. I think that's like a $1,000 to $2,000 boot camp for 3 days, but a lot of people praise on that. My business partner puts out a podcast. He has about 50 episodes on that. There's a few other podcasts, and I don't know if they're consistently putting out content. My business partner has been, and that's Mobile Home Parks in Real Life, or MHP IRL. And then there's another one by Kevin Bupp, who's a great guy. We know Kevin well. He puts out a mobile home park podcast as well. So, I mean, those are the few. In terms of books, I don't know many books on, maybe I'll write one. I don't know. But yeah, I mean, people can reach out to me on Facebook or stuff, and more than welcome to, give advice.
Awesome. So thanks, Ian, for coming on with us. How does the audience get in touch with you to learn more? How should they follow you?
Yeah, so I try to post, at least 5 days a week on LinkedIn, some form of real estate or things that we're learning about within the business. So that's a great spot. I'm pretty active on that. Our Facebook group is called Mobile Home Park Mastermind. If you search that, okay. It's a private group, but it automatically accepts everyone. And so you feel free to join that. And then if, I'm on Facebook as well, and I'm on there quite frequently. So I would say those are probably the best 3 to reach us at. And feel free to listen to Ryan's podcast, or you can reach out to us via our website as well.
Awesome.
What's the last name of your partner? What's Ryan's last name?
Yeah, Narus. It's Narus.
Thank you.
Perfect. Well, awesome. Well, we're super grateful for your time. And I have like 5 pages of notes. So I'm just going to go through here. And it's crazy to me to hear your story and how many similarities there are between you and our story, and the struggles, the same exact struggles that you have in your business is exactly what we struggle with all the time. And a lot of the agents struggle with. So man, you're definitely an inspiration, and we're grateful to learn from you, and we'll definitely be in touch with you about the journey. And one last question, are you taking on new investors now, or do you have enough capital?
Right now we aren't, but by the end of the year, there might be some opportunities for us to look into that. And the reason why it's no now is just because the deals are all kind of recourse deals. They're kind of really messy,
Right.
and require us to do a lot of work before they're somewhat reasonable. But I would say, I always tell people when I network with them, it's like, you never know when we might become a value to each other. So let's stay in touch. Like, don't be afraid to reach out. We'd love to connect. And if we can help each other, if I can just help you get along your way a little bit more, like I'm not keeping tally like, oh, I helped this person do this. Like, if you give value to enough people, life comes back to you.
I love that.
It. That's perfect to end it with. All right, perfect. Thank you, Ian. Have a good one.
Thanks, Ian.
Thanks.